Hello everyone, welcome back. I got some really good ones for you today on this Wednesday, October 18th, 2023. Lots been going on with the markets and geopolitics, so that's what we're going to be focusing on for this evening's video. Welcome back, glad you made it, glad we could hang out together. Let's dive right into these markets, shall we? We'll start with the 10-year yield in the bond market. We see the 10-year yield all the way up there at 4.93%. Oh my gosh, these yields are getting a little bit too high for the stock market, real estate market's liking, and we're seeing that. With that 10-year yield up there at 4.93%, we're seeing the S&P 500, NASDAQ, and Dow Jones all giving some back today, falling under a little bit of pressure. The S&P 500 down just over 1%, 1.3% today. So 4,314 close. Seeing the NASDAQ pull back modestly as well today. A little bit more than the S&P 500, 1.62% pullback today, leaving the NASDAQ closing at around 13,314. Dow Jones down as well, but only about 1%, 0.98%, down to 33,665. So as the 10-year yield rises, interest rates rise, that dollar in relative terms rises, kind of puts downward pressure on the stock market. Also saw the VIX pop today. The fear gauge popped up about 7.5%. That kind of move up in the VIX, up in the dollar, up in yields, rates, puts downward pressure on stock prices, kind of the basic mechanism we're continuing to see play out. I will say though, in spite of these rising yields, rising rates, and rising dollar, the stock market has been very resilient so far this year, and I think a lot of that has to do with the dollar being quite weak in absolute terms. Put another way, bonds have been pretty well obliterated this year. Cash has been pretty well obliterated. Bonds issued today with a yield close to 5%, that could be pretty attractive, but because yields today are pushing 5%, if you had bought bonds at any point in time in the last couple years at a lower yield, you've also lost value in those bonds, because would you rather have a 10-year yield yielding 2.5%, or would you rather take a 5% yield? You know, you'd rather take that 5% yield today. You'd like to buy bonds today, and any of the bonds you bought over the last year or 2 years, you don't want that low yield. It really destroys the value of those bonds. So put another way, even though bond yields, interest rates, the dollar has been rising this year, people still do not want to be holding cash or holding bonds, because if you're holding bonds, you're a creditor to the U.S. government. If you're holding cash, you're a creditor to the U.S. government. And that's just, investors have much rather preferred to own large cap, mega cap stocks, own these companies, as opposed to becoming a lender to the U.S. government, So even though bond yields have pushed up quite a bit today, and it's put downward pressure on the stock market's been very resilient lately, because Tina, there is no alternative. What, you want to buy bonds? We don't like bonds on this channel. You want to stay in cash? We don't like staying in cash on this channel. We like high growth tech stocks, energy stocks, crypto, physical precious metals. Those are kind of the things that we're into. Speaking of precious metals, we saw gold pop today about 1.5%, silver popping 4%. A lot of that is being driven by geopolitical events. Gold generally performs as a safe haven, right? So whenever government issued currencies are really hurting, and whenever people don't really want to lean on counterparties to invest with other people, physical gold remains generally the store of value, the yardstick against which everything else fluctuates. Gold's kind of like home base, So gold tends to do really well when other countries are starting to have problems. You start seeing geopolitical tensions rising and an uncertain geopolitical outlook. Gold tends to do well in that environment. But we've been fans of buying and holding physical precious metals since the inception of this channel. So it really doesn't take, another theater of war opening up in order for us to like stacking. Generally, the way we treat precious metals on this channel, We don't really get too caught up in price. We just stack steadily for the long term, stack it, tuck it away, sit on it, never sell it. It's there for you when you need it, kind of thing. You don't buy a bunch of physical gold and silver to get rich, okay? It keeps you from getting rich, but it also keeps you from becoming dirt poor, because like I said, it's kind of like the yardstick. It's kind of like the home base. It's the unchanging unit of account as far as value. An ounce of gold today will be an ounce of gold tomorrow. If you hold an ounce of gold in your hand, it's not going to spit off a dividend or a yield or start, you know, doing jumping jacks or promising you more gold coins. It's a non-productive clumps of atoms that do not change. So, whenever you see the gold price fluctuating, it's not really the gold value changing. That's the fluctuation in the currency that the gold is denominated in. So put another way, when I see gold go up 1.5% today, I don't think, oh, gold became 1.5% more valuable. I think, oh, the dollar got 1.5% weaker in absolute terms. Kind of a good way to look at it. But anyway, gold and silver both putting on a nice gain today. Oil, my gosh. So oil putting on nice gains today and over the last, over the course of the year, really. It's almost like a repeat of the 1970s, guys. You got high interest rates, high inflation, high gold, high oil. Look up the 1970s, Paul Volcker, start kind of familiarizing yourself with that decade, what the macro environment looked like back in the 1970s for the US, and you'd see a lot of striking similarities between the 1970s and today, the 2020s. So it'll be interesting to see how the rest of this decade plays out, but looking into my hazy crystal ball, I think it looks something like 1974, 5, 6, 7, 8, and 9 did. So 2024, 2025, 6, 7, 8, 9 might echo the 1970s. Or not, I could totally be wrong, but kind of building a framework here, I'd say this decade is most comparable to the 1970s. So we got higher rates, higher inflation, higher gold, higher energy. Geez. We have Bitcoin right now hanging out at 28,326. I like it here. I don't think Bitcoin is too overvalued or undervalued. I think the cost to mine a Bitcoin at this point is probably sitting somewhere around $15,000 worth of energy to mine a Bitcoin. And rarely do commodities trade below the cost of production. So I think a really good floor for Bitcoin would be 15,000. It'd be really undervalued there. And then I think if we were to get back into the 40s or 50s in the next few months, well, we could be getting into maybe overvalued territory. So I really like Bitcoin here at 28,326. If you wanted to do a little bit of stacking Bitcoin, if not though, stacking sats. If not though, you can also avoid the Bitcoin Satoshis. So your call. Ethereum right now hanging out at 1,562. We're bullish and constructive on Ethereum on this channel. I could see Ethereum one day matching the market cap of Apple, which Apple is about a $3 trillion market cap. And if ETH had a $3 trillion market cap, that'd put it at about 20,000. So up from, 1,500 today to 20,000 would be a heck of a return for the long term. And, I think ETH could ultimately get there. All we need ETH to do, Ethereum, is match the market cap of Apple, and there you go. You're at $20,000 ETH, and I don't think that's too far-fetched. So, maybe if I wanted to put some price targets, I could put a $20,000 price target on ETH. For Bitcoin, I want to say $1 million, guys, but I don't want to be that pie in the sky guy that just comes out here, Bitcoin to 5 million, But put it this way, one Bitcoin right now is equal to one car. I think maybe in 10, 20 years from now, one Bitcoin could be worth more like a house. Maybe median home prices in 10 years from now could be like 700,000, and that could put Bitcoin at, like 700,000, 500,000, $1 million even. I think Kathy Wood, a pretty renowned investor, you can look up Kathy Wood. She runs the ARK fund. I think she's got $1 million price target on Bitcoin. So be careful if you think that's too high and too pie in the sky. There's a lot of really well-to-do investors that are really plugged in and pretty reasonable and pragmatic people that, share that $1 million Bitcoin price target. So, and if I wanted to put a price target on oil right now, I think WTI crude, West Texas Intermediates, hanging out at about $90 a barrel. I think over the next 5-10 years, we could trade as high as $150, $200 a barrel. I think $150 oil is a pretty good price target. I don't think we'll get there this year. I see very little odds of that happening, but I could see, if inflation really remains that persistent and things really continue to kind of spiral out of control for the dollar, I do think oil could hit $100.50 a barrel by as early as 2024, end of 2024. So, something to watch for, or not. I'm just kind of staring into my hazy crystal ball here, so building a framework. So, feel free to agree or don't. If you don't agree, hey, drop a comment. Let's air it out. I love civil discourse. It's ultimately how we get better. So, let me know what you guys think. What are your price targets for crude oil? Provide a price and a time frame. What are your targets for Ethereum, Bitcoin? That'd kind of help me out, right? So we've kind of discussed the 10-year yield, the stock market, the fear gauge popping up a little bit, the dollar in relative terms popping today, that dollar chart coming up a little bit. Whenever the dollar comes up, yields come up, rates come up, the VIX comes up. That's generally a fear trade, and it tells the three major stock indices to trade down, and you're kind of seeing that. And we even have the added kicker of gold moving up too, kind of in the background. So stocks falling under a little bit of pressure, all three major US stock indices. But guys, I'm not worried about the stock market crashing or anything like that. So we'll talk more about the stock market as we get into discussing geopolitics. Woo. Israel and Hamas. We have not spoken about what's going on between the IDF and Hamas. So the Israeli Defense Forces, Hamas. Then we have in Lebanon, Hezbollah. Then we have the poor Israeli civilians caught in the middle and the poor Palestinian civilians caught in the middle. On this channel, we do talk a lot about geopolitics, but I'm not taking a side with this war, guys. Just like I have never taken a side in the Ukraine-Russia fight, I am not going to take a side between supporting the IDF and the Hamas. You can be pro-Israel, but not be a terrorist, and you can be pro-Palestinian, but not being an anti-Semite against Israel. You see, guys, how being anti-war is a tenable position. Now, I will say this. Hamas, I saw those videos that Hamas posted when they sacked all those settlements along the border with Gaza, and they sacked those military bases and slaughtered everybody. And then they want, what really gets me is when you're a civilized culture and people, those are war crimes, and that's very taboo stuff when civilians get hurt. And so the idea that they hurt civilians and then film it and say, look what I did, like, aren't you on my side? It makes me throw up in my mouth. I don't know where they're going with that. So I cannot reason with Hamas and this visceral free fall into barbarism. But do you think I'm going to support the Israeli Defense Forces and their genocidal rhetoric I've been hearing this last few weeks? Their response is not measured because they're very angry. It's kind of reminds me of post 9/11 Bush coming out to just declare war on everyone, to include like Iraq, and just get really mad and start really lashing out. And this kind of reminds me of like that wartime posture that kind of creates a Patriot Act type environment where we spy on the people, we give the government way too much power and too much control. So I'm seeing a little bit of George W. Bush and Netanyahu, and I don't really like the direction that's going, and I don't like hearing the Israeli Defense Forces talking about, mowing the lawn Google mowing the lawn, Israeli Defense Forces versus Hamas. The phrase mowing the lawn is really a euphemism for every couple years, the Palestinian weeds just grow too long and you got to go just cut them back down, and then they grow back and you just got to go mow the lawn every year or so. Like that is extremely dehumanizing, and I would expect more from a civilized democracy with a very developed economy and well-educated people. I don't like this mowing the lawn euphemism for killing people every year or so. The annual hunting of Hamas and the collateral damage that'll be the Palestinian people. Collateral damage, guys, that's a euphemism for dead civilians, so that kind of stuff just, it really turns my stomach. And I do believe I can be supportive of all the innocent, good people that are caught in the middle on both sides. And then I do believe I can come out here and be anti-war and consider that a tenable position. So don't expect me to take sides in this, but do expect me to cover this, because we pretty much have to. It's really taken center stage in what's going on. Not a whole lot of talk about Hawaii, which we keep an eye on the follow up with what's going on in Lahaina and Maui, the Maui fires. We shouldn't just move on to the next thing and forget about it. So keep an eye on that. Keep an eye on the Ukraine war. But have you noticed in the news cycle now, they're just, Israel versus Hamas, Israel versus Hamas, sell you on a new war. Look at this, look at this horrible footage. Look at this horrible war crimes that these people did. Look at these horrible war. It's ridiculous, guys. So keeping them on a diet. The Israeli Defense Forces talk about keeping the Palestinians on a diet because they control everything that goes in and out of the Gaza Strip. I've heard it described by many as a open air prison with 2.2 million people in it, and a relatively very small amount of space, So you got 2.2 million people in a very densely populated, crowded, tiny little place, and then it's completely surrounded by the IDF, who's controlling what goes in and out of that place, to include the amount of food and calories. And they talk about, keeping these people on a diet, a euphemism for starving these people. Disgusting. I hear about this siege. Oh yeah, we're gonna, before we do our ground invasion of Gaza, which in quotes is side note is probably to take land and never give it back. That's kind of the pattern here, is you displace Palestinian people, and then they've gone off to a refugee camp, and then the IDF just kind of moves in, and their plan is just to never leave. It's ours now. And I'm against Hamas telling the Palestinian people to stay because they're a meat shield. It's really sad, but I can also see why they might say that, because they're worried if the Palestinians do leave Gaza, the Israelis are going to come in and just keep it. And that's a pattern we've seen played out over the decades, going back to like 1948. It's like, take a chunk, don't give it back. Take a chunk, don't give it back. Take the Golan Heights, don't give it back. Push Israeli settlers into the West Bank, don't give any of that back. And, that's a trend that I find very disturbing and unsettling, and I pray for peace in the Middle East. And that's so corny and cliche and played out, but I do. And I'm going to be doing it tonight, So not with these wars, guys, but it huge implications, huge knock-on effects. Think about like the rest of the region right now. Hezbollah, which is much larger than Hamas, is north of Israel, firing rockets and artillery from Lebanon into Israel. So you have tensions flaring up all along the Lebanon-Israeli border, Syrian-Israeli border. Now Israel having problems in both the West Bank and the Gaza Strip. Guys, the entire region is becoming completely unstable. And the implications for that could be, we're probably already in World War III. I hate to say that, but this is kind of how World War II started. A bunch of little isolated problems between countries across the world, and then it slowly devolves into this half of the world versus that half of the world, you know? And there's no question that Iran is backing Hamas. So Iran, who's building drones and selling them to Russia to kill Ukrainians, is also sending aid and weapons to Hamas to fight Israel. So you see how there is a connection between the Ukraine-Russia conflict and the Israel-Hamas conflict, and that kind of that common denominator is you have Iran fighting a proxy war and you have the United States fighting a proxy war. And you see how that can begin to spiral out of control, you know? And we've already seen kind of like the sanctions against Iran and Russia, and all world wars start with an economic war and sanctions and tariffs and embargoes. So I don't like these developments, guys, but you know, we gotta discuss it. Whew, heavy stuff. I really hope there can be a peaceful resolution and we can make something work for both sides. But also I understand that these conflicts are riddled in nuance and complexity and historical context that I just don't fully understand, you guys. I'll be the first to admit it. So when I see these things going down, I just hope the greatest amount of good to the greatest amount of people and not the most amount of suffering to the group that's not on my team. I'm not going to take that position. I'm going to leave you off on a bright note before I let you guys go. Try to lighten it up a little bit. This is just a stock you can look at, guys. This is not a buy or sell recommendation. We don't do buy or sell recommendations on this channel. But I do want to point out Monster Beverage Company, stock ticker MNST. Go ahead and look at an all-time chart of Monster Beverage Company. You know, they started out selling those little green monsters, and they had like a couple flavors, and now they have half the gas station, you know? Look at how that stock has performed from an all-time basis, and you'll be like, dude, this is better than Bitcoin. This is better than Tesla. This is like the apex asset right here. So I would encourage you to look at Monster. Maybe if you were like you owned Starbucks, maybe you could consider, not telling you to do this, but maybe if you owned some shares of Starbucks, you could be like, hey, instead of going with Starbucks, I think maybe there could be some more opportunity in Monster, stock ticker MNST. And you know, you might be like, Starbucks, Monster, what do those have in common? They sell an addictive compound, you guys. I hate to say it. I don't like buying Pfizer and big pharma stocks and whoever's making all that Oxycontin crapola. But for addictive compounds, I do like Monster Energy maybe, and maybe some Starbucks, you know? So I'm going to stay away from like big pharma. I'm going to stay away from owning like cigarette companies or alcohol companies. Like I'm not big in illicit compounds and drugs that aren't good for people. But, you know, maybe you could make an exception for Monster Energy if you're into that kind of thing. So just take a look at stock ticker MNST. Maybe Monster has a place in your portfolio. Maybe not. Just an idea, just something to float past you. But boy, that chart does not lie. So I'm looking quite bullish and quite constructive on Monster Beverage Corporation. But again, guys, not a buy or sell recommendation. Can't do those, won't do those. Everybody's at a different place in life. Everyone has a completely different risk tolerance. You know, some people hate caffeine and are really appalled that people are so addicted to caffeine, so they want nothing to do with Starbucks or nothing to do with Monster. But just wanted to bring to your attention Monster Beverage Co. because I think it's been a real outperformer, you know, a real solid performer, and not really getting a lot of play. It's not like I'm pulling this off of Yahoo Finance. It's kind of a sneaky one, so we'll just have to see where that goes. But it's trading around $50 a share. Go ahead and take a look at it. That's all I got for you guys for right now. We're just gonna carry on, reconvene as things progress. Sorry, it's been a while since my last video. You know, I try to get these videos out 1 or 2 a week, you know, keep the channel moving in the right direction, keep everything relevant and on an even keel. So I'll probably be back in the next 48, 72 hours, hit you guys with another video. In the meantime, hope this video finds you doing well. Thanks for hanging out with me. Like, subscribe, comment, share, whatever. You guys are awesome. And we're just going to keep going, all right? Till next time.